Bitcoin trades in a predictable range, but its form is, we'll hear the sideways price action tempt altcoin traders to open new positions. A trending move in an asset class attracts traders, while adult price action drives investors to the sidelines. Bitcoin has largely been stuck in a range for the past several months, which could be one of the reasons for the drop in spot volumes. Bloomberg reported on October 11th that Coinbase's spot trading volume plunged 52% in the Q3 2023 compared to Q3 2022. While the short term remains uncertain, traders need to be watchful because loan consolidations are generally followed by an explosive price action. The only problem is that it is difficult to predict the direction of breakout with certainty. Considering that the bulls have not allowed Bitcoin to dip back below $25,000 in the past few months, it increases likelihood of an upside breakout. Investing legend Paul Tudor Jones said in a recent interview on CNBC that he is not bullish on the equities markets as he believes that an escalation in the system and problems. She's a born plant, but she must be Tashians as he made a price. And will bears sink Bitcoin below the immediate support, and could that cause it further? Let's analyze the charts of the top 10 cryptocurrencies to find out. Bitcoin sliced through the 20-day exponential moving average, $27,148 on October 11, but the bears could not tug the price below the 50-day simple moving average, $26,630. The bulls successfully defended the 50-day SMA on October 2000 and October 12, but they're struggling to start a rebound. And this suggests a lack of demand at higher levels. And the bears will next attempt to sink the price below the 50-day SMA and come out on top. If this level gives way, the BTC USDT pair could retest the strong support at $26,000. This level is likely to witness aggressive buying by the bulls. A rally above the 20-day MA will be the first indication of strength. The pair can then climb to the steep overhead resistance at $28,143. This is an important level to watch out for because close above it can signal the start of a short-term up move. Ether dipped to the critical support at 1,531 October 12, but a minor positive is that the bulls successfully held this level. The RSI is showing signs of a positive divergence, indicating that the bearish momentum may be weakening. The bulls will try to push the price to the moving averages to price, where the bears are again likely to mount a strong if the price turns down sharply from the 20-day EMA, $1,606. It will suggest that bears remain in command. The Ether USDT pair could then crumble below $1,531 and start to the machine said that mission has crumbled mission. If bulls want to prevent the fall, they will have to kick the price above the moving averages. The pair may then climb to $1,746, where the bulls may again face strong selling by the bears. BNB fell to the strong support at $203, but the long tail on the candlestick shows that the bulls are protecting the level with force. The bulls will have to quickly thrust the price above the moving averages and the downtrend line to indicate that the bears may be losing their grip. The BNB USDT in pair could then start an up move to $235 and later to $250. On the contrary, if the price turns down from the moving averages, it will indicate that every minor rise is being sold into. A break below the $203 support will complete a descending triangle pattern, which could start a downward move to $183. XRP fell below the uptrend line on October 11th, indicating that the bullish pressure is reducing. The drop suggests that the price will continue to oscillate between $41 In my code time, that trader is the important of its canon. And they animate this small feature. Looks like a $41 for a while longer. There is support at 60, 40, 50. But if it cracks, the XRP USDT pair may tumble to the important level at 41 cents. The bulls are expected to buy this dip aggressively, which could keep the range-bound action intact. On the upside, a break and close above the moving averages will be the first sign of strength. The buyers will then make one more attempt to drive the price to the overhead resistance at $56. A break and close above this level will indicate the start of a new potential uptrend. Solana slipped below the 20-day EMA and one-day $21 on October 12, indicating that the bears are maintaining their pressure. Both moving averages have flattened out, and the RSI is near the midpoint, indicating a balance between supply and demand. The bears will try to strengthen their position, dragging price below the 50-day SMA and $20. If they do that, the SOL USDT pair could slump to $17.33. On the other hand, if the price turns up and rises above $22.50, it will tilt a short-term advantage in favor of the buyers. The pair could then rise to the neckline of the inverse head and shoulders pair. Cardano's formed long tails on successive candlesticks since October 9th, but the bulls failed to start a recovery. This suggests a lack of demand at higher levels. The ADA USDT pair is near the 24 support, and the RSI is showing signs of a positive divergence. This suggests that the selling pressure is reducing and a relief rally is possible. The first stop on the upside is likely to be the moving averages. If this resistance is crossed, the pair may reach 19.27 cents and then 2.28. And contrary to this assumption, if the price continues lower and skids below 0.24, it will indicate that the bears are in no mood to relent. That could clear the path for a fall to 22 and eventually 20 cents. Dogecoin has been trading below the NX6 support since October 9, suggesting that the markets have accepted the lower levels. The bears will try to sink the price to the vital support at $0.55. This level is likely to witness strong buying by the bulls. If the price rebounds off this level, the DOGE USDT pair may consolidate between 0.055 and 0.64 sometime. The downsloping moving averages and the RSI near the oversold zone indicate that bears have the upper hand. If bulls want to make a comeback, they will have to quickly propel the price above the moving averages, and that could start a recovery to $607. Timecoin has been in a corrective phase for the past few days. Profit booking by the traders pulled the price below the 50-day SMA on October 12. The bulls are trying to reclaim the level and push the price back above the moving averages over the next few days. If they manage to do that, it will indicate that the break below the 50-day SMA may have been a bear trap. That could open the doors for a possible rise to $2.31. Instead, if the TON USDT pair turns down from the moving averages, it will suggest that the sentiment has turned negative and every relief rally is being sold into. That will increase the risk of a fall to $1.60. And Polkadot continued its decline in the past few days and reached near the target objective at $350 on October 12. This level is likely to act as a solid build on the way up. The 20-day EMA $3.95 is the key level to keep an eye on. If the price turns down from the 20-day EMA, it will signal that traders are selling on relief rallies. That could enhance the prospects of a drop below $3.50. Contrarily, if bulls drive and sustain the price above the 20-day EMA, it will indicate that the markets have rejected the lower levels that may trap the aggressive bear, resulting in a short squeeze toward the downtrend line. Polygon continues to weaken toward the critical support at 49 cents. indicating that the bulls are not risking a buy at higher levels. In a range, traders generally buy near the support and sell close to the resistance. In this case, the bulls are likely to buy the dips to 49 with vigor. If the price turns up from this level with strength, the MATIC USDT pair may reach the moving averages. If the price turns down sharply from moving averages, it will increase the likelihood of a break below 49. If that happens, the pair could plunge to 45. On the contrary, a rally above the moving averages will signal that the range-bound action may extend for a few more days.